Ask an expert. Your questions answered by qualified professionals. Informative and insightful. The Ask an Expert series, presented by Penn Mutual. Here's today's question. How is life insurance used as part of a well-rounded retirement portfolio?
Life insurance makes your other retirement assets better. And what do I mean by that? If you need to live off of your assets and they're in equities and you take money out in a down year, you never recoup the opportunity of that going back up. Having a product that's non-correlated that allows you to take money out and put it back in is something that makes all of your other assets and investments more user-friendly during tough times. Most people think that life insurance is only important when the kids are little and the mortgage is big. And while that is important, there's a lot more to the story. Owning life insurance into retirement allows you the flexibility to utilize your other assets and enjoy them. You don't have to worry about leaving a legacy for the children because the life insurance policy will do that. In addition to that, life insurance, if funded well, creates significant cash values that can be used as a supplemental or even, in a targeted approach, a primary source of retirement income. Overall, having life insurance in your financial plan makes it a healthy financial plan and makes it a complete financial plan. To discuss the different strategies that can help your client during retirement, please contact your regional representative.